Have you ever wondered whether it's possible to make a good return on mutual funds, like say 15% compounded over a few years? If this is something you want to achieve, you should listen to Chirag's wealth story. Let's talk about how he managed to achieve this target. Chirag was in his mid-20s when he discovered mutual funds. He thought this was a great way of growing his wealth, and he used to look at different newspapers as well as online research portals to find the best mutual funds for himself. So over a period of time, Chirag had built his mutual fund portfolio through regular SIPs as well as lump sum investments. However, after a few years, Chirag was a little upset because his returns were still low, and although he was a long-term investor, it was a bit disheartening to see mid-single-digit returns on his investments. So he knew something was not going right, and this is why Chirag decided to get an investment review done by an investment advisor. So Chirag learnt a lot from this interaction with his investment advisor. He realized that first of all, up until that point, he didn't even know what his risk profile was, and by taking a risk profile test, he had understood himself better. So Chirag turned out to be a moderately aggressive investor, and that allowed him to structure his portfolio differently from how he had been doing it up until then. The second thing that Chirag realized was the portfolio structure. So what he had done until 2019 was invest in small and mid cap funds. Those were performing quite well. They had also been bought at the wrong time. So although the quality of his portfolio was good, the reason he was low on performance was because he had bought things at expensive valuations. He also did not have enough allocation to thematic and sectoral funds, which are suitable for a moderately aggressive investor. So once Chirag realized these things, he began reworking and restructuring his portfolio under the guidance of his investment advisor. So over a period of 3 years, Chirag had built positions in sectoral and thematic ideas like infrastructure, public sector undertakings, as well as commodities. And he had also increased his large cap allocation, which he was biased against before because he thought that he was an aggressive investor and aggressive investors couldn't make much money in large cap funds. But this turned out not to be true because they were undervalued, and this helped increase his overall portfolio performance. So through a systematic process of reviewing his portfolio, contributing to it through SIPs, and scaling up when the markets were down, Chirag was able to generate a handsome return of 15% CAGR over a period of time. And this is something that you can achieve too. And the starting step is an investment review. So if you would like an investment review, get in touch with us.